So I'm back tonight for another show. Now, recently, the Fed Fund futures are pricing in between 1 to 2 rate cuts in 12 months, which is beyond what is justified by economic data, according to some experts. However, Larry Kudlow, who has always been a perma-bull, green shoots in the economy, deficit spending with the supply. He's been a big supply sider, still running King Dollar stuff when he had a CNBC show. He used to have a cocaine addiction, which is why he's called Cocaine Larry. And he has been out lobbying for the last, 5 or 6 days, approximately, for a 50 basis point rate cut. So if you're not sure what 50 basis points is, the Federal Reserve has been doing either raises or cuts in 25 basis point increments. That is a quarter of a point. So 50 basis points would be 2 quarter-point cuts. So just for clarification there for our newbie listeners who are not familiar with exactly what that means, but that is very interesting because Larry Kudlow and others, the other trumpets, the other people who basically just spew whatever the economic propaganda is, whatever spin Donald Trump or Donald Pump puts out about the economy and the stock market and how great things are, well, why are they asking for cuts then, rapidly? So, see, these two things don't jive, which is, we've always had we've had for, not always, but for a while now, we've had the fundamentals economic reality dislocated from asset prices. However, I think I've tried to make this point for a while now that things, every 6 months or 12 months just keep getting even more bizarro world. And let me add to my points here about the bizarro world, the Twilight Zone, Black Mirror, pick your analogy. So, according to most experts, economic experts, about 70% of the real U.S. economy is based on consumer spending. Well, the sales numbers for retail and restaurants just crashed again. Okay, there's a chart of it in the Wall Street for Main Street Facebook group, and it is not pretty. It crashed really, really violently. And yet, in spite of that, the same narrative, the Donald Pump crowd and his trumpets and Larry Kudlow and the other spinsters who are doing MOPE, Management of Perception Economics, as Jim Sinclair likes to say, are saying how great the U.S. economy is. Well, it's great if you count the fact that everyone now has to have 3 part-time jobs to pay their bills to keep their head above water. Maybe that's considered great by some people's standards. I don't consider that great. I don't consider that great how I graduated college from 13 years ago, and even though I'm eating way less, my bills have doubled, my everyday bills. And so here's some other additional stats I wanted to bring up about how bad the real economy is. And, in spite of that, yesterday the stock markets rallied. And in spite of that, in spite of the rate cuts, which you would think would mean that with the rate cuts, QT ending, no more rate hikes, you'd think that would mean a weak dollar. But the dollar index has rallied. The dollar index, when we're doing this live stream, is at 97.26. So the dollar index has been having a nice little rally here for the last 4 or 5 days. Okay, so let me get to these stories. And also, I want to present a general theme and provide you an exact example of how clueless the people at the Federal Reserve are. And some people say it's a conspiracy. They're intentionally doing this to collapse the economy. Maybe they are intentionally trying to devalue the dollar, but they are making enormous mistakes. And because they have the world reserve currency, because they have an enormous military, they're allowed to paper over the mistakes with digital debt-based fiat currency. But the Fed, everything is not going according to plan at the Fed. Ben Bernanke screwed things up and put the Fed in a corner that they really cannot get out of. Okay, so went off a little bit on tangent, but wanted to bring up that point and talk about it later in the show, just to get you guys interested in this, that the Fed is clueless. They do make an enormous amount of mistakes. However, they have the world reserve currency, and because they have the military, and a lot of countries are scared of them, they can still paper over their mistakes. I don't know how much longer that's going to be for, but they can do it now. And they've been doing it for a while. And as long as they can stagflate and lie, most Americans don't even care. Or too busy, too brainwashed, too stupid. You pick what a combination of those things. Okay, so story number one, actually, let me talk about this story first because it occurred first. This one was published on February 21st, 2019. I missed it. I don't know why, but this fits in with the second story, and this is why I'm saying this story first. So consumer debt hits $4 trillion. So we are now over Americans' collective debt. This is like credit card debt, student loan debt, automobile financing, all these things together is over $4 trillion now for the first time. Just a massive amount, according to the Federal Reserve. Okay, so I'll attach, if you want to go more in depth about the story, I'll attach a link to the story in the Wall Street for Main Street, well, it is in the Wall Street for Main Street Facebook group. But if you want to actually, like, it'll be in the information section of the video. Okay, next story, and this one ties in with it. This is part two of this story, is 70% of consumers with credit cards say they can't pay it off this year. So let's see here. Aggregate household debt balances jumped in the fourth quarter 2018 as of late December. Total household indebtedness was at a staggering $13.54 trillion, $32 billion higher than the third quarter of 2018. And this is the more interesting part, more troubling, is that 37 million Americans had a 90-day delinquent strike added to their credit report last quarter, an increase of 2 million from the fourth quarter of 2017. These 37 million delinquent accounts held roughly $68 billion in debt, or roughly the market cap of BlackRock. So there's more stuff here in the story, but the gist of it is that the real economy in the US is, even though people may have more part-time jobs, people are not building that savings. They are not getting ahead. In fact, the evidence is showing with rising workers' wages and now the oil price rally that more inflation is coming back into the system, and the U.S. consumer, on top of the debt they already have, is going to be overwhelmed with additional inflation. With the oil price rally, gas prices are going up, wages are rising. So that means as business owners, either the large corporations or small businesses will be passing those wage increases onto their customers eventually. And also that taxes, oh my God. Just the stories I'm hearing from tons of articles and Wall Street for Main Street listeners to the podcast of taxes going up, just layered on across the board. Listeners in Europe, listeners in the United States. It is really nuts, the amount of tax increases that are either already planned or have gone into effect just since January. And this is a new normal. And you won't hear most of the experts, and I'm using air quotes, who get paid lots of money to run their hedge fund or be an economist at an investment bank or an economist for a hedge fund, talk about the problems that the people on Main Street are dealing with. Now, they'll talk about maybe wealth inequality and how QE maybe has affected it, has created the wealth gap and the wealth disparity. So they may talk about that part, but they're not talking about the guy on Main Street whose standard of living has been destroyed the last 10 years thanks to stagflation and taxes. Okay, and it's been an ongoing problem for longer, but my point is that this is accelerating. It is accelerated since 2008, and it is getting worse. And same thing for Europe. I was gonna go on a rant at the end of the show, but let me just bring it up now that almost all the major complaints, the people who write the nastiest stuff, the trolls, and in the comment section underneath these videos, a lot of them are European Union listeners. People who have never visited the United States, and for some reason they think they know a lot about the United States, and they hate the United States, so they have a clear bias. And yet they don't try to fix any of the problems in Europe, the European Union. The European Union has immense problems. The European Union is further along the socialism, inflation, taxes, potentially populism, socialism, and political revolution cycle than the U.S. is. Okay? So I'm just tired of hearing complaint after complaint and criticism of how the U.S. has ruined everything when there's tons of people in the European Union that are not trying to do anything. And you know what? I don't even hear a lot of my European Union listeners complain about how much they're taxed. Okay, I saw someone posted in a libertarian group on Facebook, a European listener, all of his tax bills, and his aggregate tax rate, his effective tax rate, I can't remember which European Union country he was living in, but it was around 65%. Now, there is an effective tax rate in some places in the United States. Like if you live in New York City, parts of California, there are certain places in the United States. I think Washington, D.C., if you have a really nice place there, tax rates are that high. But taxes across the board are not to those levels yet in the United States. But my point is that if your taxes are that high, you shouldn't be criticizing other people. You should be trying to bring in politicians and get rid of bureaucrats that will not raise your taxes and layer it on and steal from you and ruin your standard of living and destroy your savings and all this stuff. Okay? Fix your own problems first. Stop blaming the U.S. for every single problem in the world. Okay? The U.S. did not create all the problems in Europe. George Soros, bureaucrats in Brussels, a bunch of other things, the socialism, European socialism that has been going on for many decades, even before World War II, by the way. There was wage and price controls and a bunch of other stuff in England, in the United Kingdom, where there was very little entrepreneurship and small business. England had a very planned economy for many, many years. And when Margaret Thatcher tried to do some deregulation, some capitalism and free market forces, she was hated for it. She was vilified. Okay, so everywhere's got problems, but if you're getting taxed to death at 65% of... So basically the effective tax rate, like 65%, is he showed all the taxes on his receipts for food, rent, all these income, all these different things. And when he added it all up versus his revenues, his effective tax rate was around 65%. And I can guarantee you that hardly anyone, because people are so brainwashed or don't understand what's happening, they're not complaining anymore. This is how bad the population is. And of course, they're going to blame capitalism for all the problems in society when you can't blame capitalism, because if you're getting taxed at 65%, the odds of you, and your bills are going up every year, the odds of you having any savings are almost zero. And the odds of you being able to grow your revenues are very low, unless you're very skilled laborer or a really good entrepreneur or stock trader or something like that. So I'm just tired. It's always the European Union listeners that write entire paragraphs or pages saying how bad the U.S. is and I don't understand anything in Europe. Well, you know what? Don't start saying that the U.S. has created all the problems in your society when you don't even complain that you're paying 65% taxes and layering everything across the board, and then your politicians take away your free speech. And then your politicians, do all this bad stuff, allow all these immigrants in and expect you to pay taxes on it. And then it destroys your culture and your society, increases crime, all these other things that I can mention. And somehow it's the U.S.'s fault for all this. Just ridiculous. The Watchmen 2011, you nailed it. Europe is so cucked. Yeah, it's all betas. So how many Americans would be pissed off if they were having to pay 65% taxes across the board? They can't do it at once in most areas. Now, if it's like New York City, there's all these champagne socialists there, and most of them are so rich, or they're brainwashed people that just graduated from the university, or there's actually, dumb idiots, useful idiots that voted for AOC that actually believe that, 70, 80, 90% income tax is going to fix their problems, because the goodies are going to come, like I talked about in the Eat the Rich video. Okay. But it's just ridiculous. I get tons of complaints, and it's almost all more than 90% of them are from European Union listeners that just say the U.S. has all these bad things and everything's bad about the U.S. and I would never go visit or live in the U.S. because all the gun problems and people getting killed on the news. And it's like that in the everyday situation, hardly anyone has to deal with that. Okay, and the truth is actually where guns are legal, that most people don't get killed at all. Okay, it's almost always, all these gun problems are almost always in gun-free zones. That's the truth. You won't hear that on the mainstream media because they're pathological liars and it doesn't fit the narrative. The mainstream media has lost all of its credibility. No one should listen to them really for much of anything anymore. Maybe the weather. Maybe. The Watchmen, again, nice point. Yes, so many are brainwashed. And it's the biggest complainers who are saying all these nasty things and blaming the U.S. for all the world's problems and blaming the U.S. for all the problems in Europe. It's always the European Union people. And then I ask them, have you ever visited the U.S.? No. Do you want to come here? No, I would never go there. I'm afraid of getting shot. Well, just because Chicago is a war zone doesn't mean everywhere in the United States has that crime problem, okay? It's not true. Chicago is a problem. But Chicago has been controlled by Democrat politicians for over 100 years. And there's gun-free zones everywhere. Doesn't work. You have corrupt politicians like this Kim Fox lady. Oh, the corruption charges I've heard on her. Some of the police unions now are even turning on her, and they're saying that she's on the take from organized crime and from drug cartels. Okay? Crazy stuff. So the Chicago Police Union now has turned on their own attorneys that they're supposed to be working with. That's how bad things are in Chicago. Okay, sorry, I got a little off tangent, but this was in my show notes, I swear. At least some of these things. Okay, this is not market or financial related, but my point, back to the dollar and the dollar index. The dollar index is strong, and this is on a relative basis because Europe has problems, because China has problems. And we had this enormous cryptocurrency rally in Bitcoin and some of the other major cryptos today. And according to some of the news stories out there, it looks like it's Asian trading algorithms. Well, if you listen to the most recent Kyle Bass interview on Real Vision TV, he laid out a pretty damn compelling case for how right before China is about to devalue their RMB, that the elites in the CCP, Chinese Communist Party, by the way, they outlawed, supposedly at least, cryptocurrency, Bitcoin and cryptocurrency for Chinese citizens, but they don't play by those rules, yo. So what they do is, besides buying like rare gemstones and gold and silver and real estate and artwork and getting their money out of RMB that way, now the CCP elites are buying boatloads of Bitcoin and the major cryptocurrencies like Ethereum and others prior to a major RMB devaluation. And Kyle Bass went back and showed some spikes in crypto before a China RMB devaluation in the last couple years. So this may be, there's definitely some evidence there from the past. I can't tell you for sure if that's what happened today, but it might have happened today. But the bottom line is that Chinese citizens are not stupid. They had paper money before anyone else. And so they're not going to sit back and let their government steal from them with devaluations. So they will try to get their money out some way, in whether they have laws or capital controls or whatever. They will figure out ways to get their money out of RMB. And it appears that may be a precursor as well. Now, the Chinese stock market has had a big rally this year, and some of that may be also Chinese citizens hedging against the RMB devaluation, but the other part may be that, and I spoke to an employee who works for Kyle Bass about this, that she thinks that the Chinese government there was a story in the Wall Street Journal a couple months ago about this, that the Chinese government was putting pressure on Morgan Stanley to include more Chinese stocks in a global emerging markets index, and that inclusion of Chinese A-shares is what has rapidly caused the rise in the Chinese stock market. That I think one of these major emerging markets index funds quadrupled the amount of Chinese shares. So we live in very interesting times. The point that I want to make, and you guys hear this all the time, is that the people in power can change the rules. They will not tell us. Sometimes they may tell us. They may make an announcement. Occasionally it might be, we're switching to cashless society, or we're going to negative interest rates at the banks. They did that in Europe. I don't know if that would work as well in the US, because there are so many retirees here who need income. So there may be a revolt at some point. They would have to sell it differently to do some type of other wealth confiscation scheme besides just say, oh, ho-hum, oh, we're gonna go to negative interest rates and everyone's gonna be okay with that. The average American needs income to retire, and most likely there would be more of a revolt than in Europe. That's just my opinion. Okay, so let me switch now to why I think the Fed really is clueless. I want to go back now to April of 2012. I went back and looked up the article for you guys to prove this. I wanted to see the exact day and time. So Robert Wenzel, or Bob Wenzel, of the Economic Policy Journal, who Mo and I in the past interviewed many times over the years, He's a good Austrian school economist. He's worked on Wall Street for many years. He's also worked in Silicon Valley and venture capital and angel investing and finance, but he's a libertarian in Austrian school economics. And so he was actually, this was shocking, they actually let him give a speech at the New York Federal Reserve Building in April of 2012. And so he gave this speech, and he talked about all the problems with Keynesian economics and how the Fed had, tons of academics who had confirmation bias. And then at the end of the speech, I'll attach a link if you want to read the speech. It's very telling. Especially what's most telling to me is the reaction of so many managers and low-level PhD economists at the New York Federal Reserve. Is they went up to Bob Wenzel, they had like a lunch there, a fancy lunch, because these are rich banksters still, and they had like a cocktail hour afterwards, and he was having lunch with some of them and drinks, and then they started asking him questions, and they said, "That's an interesting speech you gave," and they're like, "Are you with the Chicago School?" And so, for those of you who are not familiar with economics, these people who have PhDs in economics, they have so much confirmation bias. They do not study any of the other schools of economics to know what the differences are, any, strengths or weaknesses, although you guys know, I think that the Austrian School of Economics is by far the best one. It's not perfect, but it's by far the best one. And so these PhD Keynesian economists who worked at the New York Federal Reserve, whether they were management, upper management, or the low-level analysts who had just got hired at a undergraduate or grad school, MBA programs or whatever, and they were asking him if the Austrian School of Economics was the Chicago School. And the Chicago School is Milton Friedman, monetarism, Eugene Fama, although he's more of the finance part, but he still, I think, has an economics degree. And he's like the random walk, efficient markets hypothesis. But they thought that they had heard something, a few things about the Chicago School. And they really didn't know any of the differences at all between monetarism, which is what Milton Friedman came up with, and Austrian School economics. So they didn't even know the basics about that. And these are the people, guys, who are making the Fed. I believe the Fed has over 2,000 PhD economists at all the different Federal Reserve locations. Janet Yellen said the exact number a couple years ago when she was head of the Fed. I think she said over 3,000. And so the Federal Reserve has on its staff at least 2,000, maybe over 3,000 PhD economists. And they don't even know the basics about all the other schools. So they've had such a pigeonholed, tunnel vision. Yes, there we go. That's the right phrase. Tunnel vision. Their entire course of study has been tunnel vision. Maybe they had a paragraph about the Austrian School of Economics in an obscure book that they don't even remember that said that, the Austrian School of Economics stupidly thought that gold was important. Ha 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 ha. And then, that might be all that they learned about the Austrian School of Economics. And then, maybe they learned a page about the Chicago School and forgot about it. And so these are the people that have all this power to make the decisions, and they make these stupid models, and they rely on the Phillips curve, which says that inflation and unemployment cannot occur at the same time, and stagflation proved them wrong in the 70s. So they shouldn't even be using these models anymore, and yet they're still using them. So back to what I said at the beginning in the first couple minutes. The Federal Reserve, there's book smart people there, but they have no common sense. They have not learned all these different perspectives, all these different economic schools. And so whenever they make enormous mistakes, what they just resort to then is lowering interest rates, cutting interest rates, and then papering everything over. And they can get away with this because the U.S. still has the world's reserve currency, and the U.S. still has the military to enforce the world reserve currency. Now, the petrodollar isn't as important as it used to be, although the U.S. has so much oil production now that it's moving back towards where the U.S. has enough oil now to dictate more policy too. about that regard. But the petrodollar was never really as important. Initially, when it started over, it was, but it was not for the last, I don't know, since what, 70, it was 71 when the petrodollar started. And it hasn't been the main key driver. It's been the U.S. military for a very long time that has protected the world reserve currency status. And also the SWIFT payment system. And now you're seeing evidence with Russia and China working on new banking systems, Russia accumulating massive amounts of physical gold. I think they bought 30 tons, they announced, of physical gold just last month. So you are seeing them hedging, getting insurance, and diversifying away from the system. But when you have the world reserve currency and you have a very powerful military and you have the main payment system, the global payment system, the SWIFT payment system, you can get away with making all kinds of dumb, stupid, crazy mistakes. You just paper over everything. You just change the rules. You have the guns. You have the guns too. You have the military with the guns to enforce the rules. Okay, let me just check my notes. I think I covered most of everything pretty damn good. I think I covered everything without looking at my notes. Yeah, so there's a debate among financial professionals, people who have written successful investing books that are bestsellers, people who are hedge fund managers, people who are newsletter writers, a lot of successful financial professionals over whether or not the Fed is actually clueless or they actually have a plan. And I would say that most of the time, the Fed is totally clueless, makes mistakes all the time, but ultimately, the Fed can just paper over everything, at least for now, with digital debt-based dollars. And so they've gotten away with this for now. This will eventually end. I don't know the timing when it'll end, but it will eventually end. Because the people in Russia, the people in China, the emerging markets countries, the European Union, they know what the U.S. is really doing behind the scenes. They know that the U.S., every time, the large U.S. banks make dumb loans in Mexico, right? And those loans go bad, that the rules get changed, and Mexico, during the tequila crisis, got 10 billion, 20 billion. At the time, it was a lot of currency swaps, and the banks' bad bets on bad Mexican debt were made whole. Similar situation with long-term capital management and the Asian tiger crisis. Now, there were other factors involved, obviously, and other bad bets by other players, but the Wall Street banks were also involved in bad bets. But these crises have, because the banks have moral hazard, the banks are not, most of them are not going bankrupt after this, that they think that they can get away with this, and so the scale of the crises has just escalated and escalated and escalated. The first crisis where I think the currency swaps between central banks were used was only a couple $1 billion or $10 billion. It was, and this was like 1980s or 1990s. It was not a massive number. Now at the time it seemed like a lot, but compared to today, it's almost nothing. Hello, Peter. I don't want to talk about the religious aspect. I just want to mostly focus on markets. And actually, Peter, a lot of the people at the top, the economic and political elites, are not religious at all. A lot of them are not Christian or Jewish or Muslim. A lot of them don't believe in God. A lot of them actually worship themselves and worship, the devil or demons. So they're into the occult. So to say that this thing is religious or one religious group or another, most of the really, really rich people are not really that religious at all. Okay, so we have 1 million calves dead in Nebraska. It's a really sad situation. Hopefully the farmers figure out a way. So this is not counted in the U.S.'s budget deficits and the blowouts. The U.S. moves these off balance sheet. So every time the U.S. government, federal government does a massive bailout, say to rebuild a city or state after a flood or a hurricane or an earthquake or something like that, if it's like 80 billion or 100 billion or 200 billion, the U.S. due to accounting schemes, and they don't use GAAP, generally accepted accounting principles, they tend to move these things off balance sheet. So we may see something like that happen, but in terms of like investing or trading strategy off of this, most of my listeners who are retail investors, I would avoid, this is not financial advice, but I would avoid the futures markets or trying to play like the agriculture trading, because a lot of the best ways to play that are in futures or options on futures. And the average retail investor should stay away from that, because normally you have to use margin. But a Main Street idea might be to go to if you need more meat for your family and you're worried about paying a higher price, you can either contact a local farmer at your farmer's market, or you can look on the internet and search and look for local farmers and call the guy up and say, like, look, I realized because of the 1 million calves dead in Nebraska that the price of beef is going to go up a lot. Maybe we can work out some type of deal where I prepay in advance for certain amount of meat for my family, pay you the money now so you make somewhat of a profit, but I lock in a lower price than what the market price is going to be. So you can either use the online search tools to find local farmers to do that, or you can do that at your local farmers market. If you're a little bit more adventurous, maybe you try to contact Nebraska farmers and see. But I would expect the government, with the way the federal government works and the U.S. Department of Agriculture, there's games that they can play to get the farmers bailout money that's not going to count in the U.S.'s budget deficit. They can move the money off balance sheet. And I don't know if this is true or not. I haven't seen an article on this yet, but one Canadian expert that I was listening to some research on, he said that the Canadian banks, and you guys can send me articles on this if you find stuff, he said he wrote a book about this. He said hidden in the TARP bailout, the Troubled Asset Relief bailout, that Canadian banks got $180 billion in bailouts during 2008 and that they haven't paid the money back. So meanwhile, things in Canada are just getting a lot worse in terms of the real estate market and debt, credit card debt for Canada, home equity loans in Canada, consumer debt in Canada, etc. So things over the next 5 to 7 years in Australia and Canada, if you have cash, if you want to buy real estate in Australia or Canada, I would wait with cash. We know those governments are going to try to change the rules and bail out the banks. And in Australia, I think they're going after the mortgage lenders now. They're going after the mortgage lenders and trying to save the banks because they know bad things are about to happen. But if you have cash and you wait on the sidelines, you may be able to buy really quality real estate for pennies on the dollar, like what happened in the U.S. in 2008 and 9. There were a lot of good bargains in real estate. Again, not financial advice, just my opinion, but I do have friends who made absolute killings in the real estate markets and different real estate markets in the U.S. when there was blood in the streets. One of my friends, Dr. Mark Faber, he bought a lot of real estate in Atlanta, Georgia metro area, and a few other metro areas when there was blood in the streets in 2008 and 9, and he scooped up a bunch of really good bargains on rental properties. So it's all timing with these things. Normally, it's best to be contrarian. So if you don't need a mortgage, or you need a lot less mortgage and you can put like 50% down in cash, those buyers were able to scoop up phenomenal bargains. Hello, Bill. Worshipping the devil as being religious. Well, the economic and political elites, a lot of them seem to think so. They go to these like spirit cooking and the other stuff. And unfortunately, and I see this now in the DC metro area, and this is becoming a really weird trend, is there's a lot of women now that are putting on their dating profiles, like really in the front there. And some of them even have weird pictures that they're actually in witch covens, or they worship the devil now. So they have weird pictures of them going to gatherings, and they put that they're witches in a coven. I have some screenshots of this. It's freaking nuts. Okay, so I wanted to also talk about the oil price rally. So in the last 3 to 4 weeks, we've had a big oil price rally. We are at, let me pull up my oilprice.com, which is a good free website for you to bookmark with oil prices, all the different crude prices and articles. oilprice.com. We have $62.65 WTI. Brent crude is at $69.62. So we've had a big rally. It was in the mid to high 40s at one point. So we've had a big rally in the oil prices now. And this is interesting because today, Saudi Aramco, which is Saudi Arabia's national oil company, after they seized the assets from American petroleum companies, because the Ghawar field was initially founded by American petroleum engineers and geologists, American petroleum geologists. And so that field, Ghawar, has been producing massive amounts of oil for, I think, well over 100 years. And Saudi Arabia was the largest oil producer for many, many years, for decades. And at one point, I think in the last couple of years, Russia became the world's largest oil producer. And now I think the U.S., when you add up all the conventional oil production in the U.S. and the unconventional, the shale oil production, I think in total barrels, I think the U.S. is now the largest. But that's only if you include like some non-gas, some NGLs, and some other parts. So the U.S. does have a massive amount of oil production, although a lot of that shale oil is not really economic, and it's been funded with junk bonds, and there's been questionable accounting from a lot of these shale oil companies. But the Saudi Aramco released some information today. Bloomberg ran a story on it. It's in the Wall Street for Main Street Facebook group. And Saudi Aramco admitted, and a lot of people have thought this for a while, that the main field, Ghawar, a lot of people have thought that it was producing 5 million barrels per day of oil, and the numbers that just came out, and the Saudis had to admit this because they're trying to sell many billions of dollars worth of bonds. Because I guess ultimately long-term their strategy is to diversify out of oil, move profits they made in oil out of oil, and maybe they don't care if they default on the bonds ultimately. Well, or the bonds will get inflated away, more likely. But the real annual production for Ghawar now, I think, is down to 3.8 million barrels per day. So what this means for people who are not familiar is this basically proves right the peak oil people like Matthew Simmons and Steve St. Angelo and Chris Martinson and Art Berman, many of the people who are talking for years how the Saudis have not had the oil production numbers at Ghawar that they claim. Now, the Saudis have added other oil production to other wells, but those other oil wells could maybe decline faster. So Ghawar is really starting to rapidly decline because people assumed that even a couple of years ago they were still producing 5 million barrels of oil per day, and the real numbers are down to 3.8. And if you really want to get into technical stuff, one of the main reasons, if you're not familiar with the oil market, that the Saudis have maintained the high oil production numbers, and I've interviewed a lot of oil experts about this and read a lot of oil articles. As you guys know, I was an oil analyst for a year, is that a lot of the Saudi wells are actually flooded, so they do water injection. So long term, that's not really good for the well. But in the short to medium term, that maintains production levels and prevents the oil production levels from totally collapsing immediately. Taylor Collins says, royalty and streaming for meat instead of precious metals. Genius. I think there actually is an agriculture royalty and streaming company. I know the people at Sprott, Rick Rule and Jason Stevens and some of the other good people at Sprott were talking about a agriculture streaming company for land and other things that are grown, for agriculture land and other things that are grown, so you may want to look into that. They did other interviews on other podcasts about that a year or two ago. I don't remember the name of the company. Yeah, so on top of this news now that we have about the Saudi oil production, and by the way, the Saudi oil, what this means for the oil market, for the Saudi oil production, the real numbers, is that if we do have an oil crash in price, again, that the crash might not last as long because the Saudis may not have the spare capacity that people thought they had. So you have oil production in Venezuela collapsing. There were rumors, I just saw them on Twitter, that oil production now in Venezuela is down to only 500,000 barrels per day. That would basically mean that the Russians and the Chinese own almost all the remaining Venezuelan oil production as collateral for previous loans, tens of billions of dollars in loans. And if you want a number to compare, Venezuela used to produce, when things were functioning better in Venezuela, they used to produce 4 million barrels of oil per day, and now it's down to around 500,000. So that's a complete and total collapse of their oil. And so the people there who are saying, oh, it's all U.S. sanctions' fault, no. If Venezuela had actually, and there's been reports of this from my oil industry contacts that have dealt with some of the with the Venezuelan oil company where they didn't pay their bills, is that Venezuela doesn't really reinvest profits into their oil company, into their water utilities, their electric utilities, or their hospitals. Okay? So they can't blame the U.S. for that. They can't blame sanctions for that. They had many, many profits over the years, and instead of reinvesting those profits from oil into infrastructure and utilities and their oil industry, people in the Venezuelan government either stole the money or gave it out in social programs to other people. And another reason, in addition with the oil price, with the news from Saudi Arabia also, that we may have an oil price rally now. It may stay, because now the market, now that news is out there about Saudi Arabia, the market may think oil prices need to stay at certain levels. But if we do have a crash in oil, if the global economy totally collapses, if the people in power allow a collapse in oil, it would probably rebound pretty quickly, because there are supply problems now with Venezuela and with Saudi Arabia, Gawar, because it's not producing as much as people expected. And then also the other major problem too is with shale oil. And I saw a really good piece on this from Seeking Alpha. It's in the Wall Street for Main Street Facebook group. I forget the author's name. He has an oil background. And he went through the conference calls of a lot of the companies that are in shale. And the companies are obviously trying to spin things positively. There is an enormous disconnect in the financial statements versus the costs that the shale companies are claiming, because they don't have the free cash flow that they claim. But the main thing here, and this proves that a lot of the shale companies are not really doing well, is that they admitted that they don't have as much access to capital anymore, and they're also admitted on their conference calls that they're liquidating selling assets. They want to sell a lot of different assets. And so normally in a commodity cycle, in a bear market cycle, what the producers of the commodities do is they have to liquidate assets to sell cash. So either things are bad there or they're about to get worse. And so they have to liquidate assets for cash to stave off bankruptcy. Or they expect lower prices. And they need the cash as like a buffer, or to pay off debt, or to reinvest into CapEx. See, this is a major problem with mining companies, and especially shale oil companies, is the CapEx, which is maintenance capital, or CapEx. So beneath the surface, we have a lot of crazy things going on in the oil market, and if the oil price does spike, and there is one demand driver that could spike the oil price, and if the oil price got high enough, it could crash the global economy. It would be like an interest rate hike. I talked about this as well in my Goldilocks oil video that I dedicated just to the oil market. I spent about 25-30 minutes talking just about the oil market and why, if the oil price goes high enough, it crashes the global economy, and if it goes low enough, it crashes, the producers of oil could go bankrupt. So the market really needs a Goldilocks oil price, but the data has come out, and this is alarming to me, that Chinese oil demand is up 40% in only the last 4 years. So we've had in the United States, we've had pretty darn low oil prices for a while thanks to shale oil. But if Chinese oil demand, even though the real Chinese economy is not doing well, but people in China have bought scooters and motorcycles, and they're buying cheap cars, and they don't plan on, reducing their consumption for oil, because there's tons of videos on these, like, look at the ADV China videos where they're going through China or going through Vietnam, and look at all the scooters and motorcycles and cars and buses out on the roads. Okay, it's just a mess of people and traffic. There's not even normal, in a lot of areas of Vietnam, there's not even normal crosswalks from what it looks like. And so once people change their lifestyle to getting a scooter or something like that, they don't really totally cut their oil consumption. And the data shows this. I mean, every year oil consumption demand for oil goes up about 1 or 2%. So Chinese oil demand, though, is up a lot in just the last 4 years. Now, maybe some of that is them stockpiling, because I've heard they have at least 4 SPR, Strategic Petroleum Reserves. They have a lot of them. But I think a lot of it is also due to more people driving, either scooters, electric bikes, motorcycles, buses, etc., that did not consume oil in the past. So I wanted to put those things out there. So there's a lot of things going on in the oil market. It's going to be very volatile, because just in the last 3 to 4 weeks, the oil price was down to very low levels, and it's already had a big rally. And now we have all these new stories coming out about the oil market. The oil market is a very interesting market to follow. It's a lot of drama going on in there. It's very geopolitical sensitive. Okay, the Bank of International Settlements. The guy who runs it, I think, is very anti-Ben Bernanke. He doesn't like the U.S. I think it's a former central banker of Mexico. He's warning that the IMF cannot handle emerging market bailouts. Well, duh. But he just put that warning out there in public because he wants the U.S. to look bad. Nicholas says China just replaced their electric vehicle subsidies with a MPG credit scheme for automakers. So is that an incentive then to get people to drive more? Mile per gallon credit. Oh, so they want the auto manufacturers to make higher mile per gallon automobiles? Okay, I should probably do a quick comment on Basel III. There's a lot of other good analysis on Basel III, so I haven't thoroughly looked at it. I've looked at some podcasts and just 1 or 2 other articles, so I'm not an expert on Basel III and the changeover. But I think it's not as great a news as a lot of people in the gold community are saying it is. It could potentially be good news. What would make it great news for me was if some of these banks, these large, either U.S. banks or large European banks, announced that they were buying 50 tons or 100 tons of physical gold, and that they were going to start buying a certain amount of it every month, every quarter, or something like that. Some type of asset diversification plan for their reserves. So if they were going to, instead of, because the scheme that and it is a scheme, and Victor Sperandio highlighted the newest version of the scheme, which is the hold to maturity U.S. Treasury account. And the way the reserve scheme works is normally they do it with treasuries, and that's how the euro-dollar leverage and all that stuff started. The euro-dollar market and all the crazy leverage that happened in it was done initially with U.S. treasuries. But if some of these large banks started to actually buy a lot of physical gold and actually announced that they were buying it, then that would be really good. So we haven't, now there's conspiracy theorists like Ted Butler and others that are saying that JP Morgan owns tons of physical silver. I haven't seen any actual proof. So you're taking what Ted Butler said on faith. Meanwhile, Investment Rarities is running television commercials on Fox News talking about everything that Ted Butler said. But until I actually see some evidence, maybe someone pulls something from a footnote in a bank financial statement or annual report, or the bank makes an announcement with a press release saying that they're accumulating, they have a new policy to diversify their reserves now and buy physical gold, and they're storing it and getting it audited each year independently, stuff like that, then I don't think Basel III is going to be potentially too great. So that's what would have to change my mind about Basel III. That the banks actually announce that they're buying a lot of physical gold. But the good news for gold is that gold is actually holding up pretty darn good against the dollar rally. So we're at gold prices at $12.90, just above $12.90, and silver above 15. So in spite of the dollar rally, and the dollar index is, like I said, it's above 97 again, when a lot of people were calling the top in the dollar, that gold is holding up pretty good. And The physical demand for gold is strong. Like I said, Russia is buying a lot of physical gold. They announced a 30-ton purchase. Annualized, that's a lot. That's a large number. I don't know if they're going to buy it every month, but it's a pretty darn large number. Okay, water break. And another thing to take into account is with this rally in the oil price, the primary gold and primary silver miners, their costs are going to rise again. So now that we've had, because the miners don't hedge. So I've been stressing this for years now. The miners should have locked in that low oil and diesel price a couple months ago when it was cheap. Now that it's rallied, over 20%, they're dealing with market prices. So the costs for the miners, they're not going to be able to cut costs anymore. Because their oil energy input costs are like about a third, 30% to a third of their total mining costs. And the oil price just went up a lot. It rallied again. So ultimately, though, this higher oil price will mean that the miners will have to have higher gold and silver prices. Otherwise, they will have to cut back production. But we'll see. The miners are, from what I'm hearing, it looks like a lot of these mid-tier primary gold miners are on the prowl for mergers and acquisitions too. So now that Newmont has bought Goldcorp and Barrick Gold has merged with Randgold Resources, there's talks of additional mergers and acquisitions. Now, these things should have happened years ago, but I think we're at truly desperate levels where a lot of these miners cannot go out to the markets and raise capital, and they already have been cleaning up their balance sheets, so they don't really want to take on any more debt. So the last thing that they can do to cut costs is mergers and acquisitions, and either sell off non-core mines for cash or cut selling general and administrative expenses. Cut them maybe by firing. If two medium-sized or large mining companies merge, they can fire a bunch of vice presidents, and that can cut labor costs somewhat. But overall, I think gold is doing a good job. It's holding up pretty good. It's not gone crazy in price, but it also hasn't crashed. And this goes back now to the dollar. So there's just this, if you guys are not familiar with Twitter, there's just this big ongoing Twitter argument between like Luke Gromen, who's an American. He worked in finance for like almost 30 years, and he's very dollar bearish, although I think in the short term he's turned dollar bullish, versus like Brent Johnson and other people, and I'm kind of in the middle. And I did like a tweet about this. Let me pull this up real quick. So I was trying to explain to Luke Gromen on my position, because he's basically like, he's binary. He's saying binary, for those of you who are not familiar, is 0 or 1. So it's like only two outcomes. And I'm telling, so he's like either the dollar crashes or the dollar rallies a lot, and and then everything else crashes first. But I was trying to explain to him that the people in power don't want everything to crash right away. So they don't want anything to crash. Let me see if I can pull it up real quick. I'll read it to you guys. So I said most experts are just arguing, and this is me studying a lot of different people's perspectives and opinions, a lot of different economic experts, authors, money managers, a lot of different experts and their opinions. Most experts are just arguing over which country collapses first, the Titanic or the Lusitania. So will it be the European Union, Japan, China, emerging markets, or the US? Very few people will get the order right. But you have all these guys working in finance, financial professionals, smart people, and they're saying, oh, it's going to be deflation, oh, it's going to be inflation, oh, it's going to be hyperinflation, oh, China's going to decouple from the dollar is going to collapse, China and Russia are going to collapse the dollar. Well, ultimately, and I've listened to a lot of different arguments from a lot of different people in the 10 years I've been doing this, and ultimately what it comes down to is that everyone is arguing over who will collapse first. And I don't know if anyone knows for sure, but I know that people in power don't want anything to collapse. So they're trying to do stagflate and lie, which is using management of perspective economics or management of perception economics, MOPE, which is what Jim Sinclair says. And so everyone's trying to do a controlled devaluation of their currencies, which in theory, if you're a PhD Keynesian economist, in theory, it should work. But in reality, it doesn't, because you can, velocity of money increases. So if you increase the money supply by a certain level or put a certain amount of credit into the real economy or asset markets, just because you think you increase the money supply by a certain amount or the credit by a certain amount, things can go haywire. Well, Zilla, I'm friends with Brent Johnson. I speak to him a lot, and I don't know if I agree with him on everything. He's actually very bearish the dollar. Not the dollar. He's very bearish gold and very bearish gold and silver miners. He thinks they're all going to collapse first. He thinks the gold price will collapse, silver price will collapse, and almost all the miners will go bankrupt first. And so he's out of all those and waiting for those to collapse. But I don't think that will necessarily happen. Now, if the gold price collapses a lot, the miners will correspondingly collapse too. But we'll see. It looks to me, though, like gold is holding up pretty good despite the dollar rally. So maybe we have a 2008 type of event where the dollar rally increases a lot and it collapses things, and people, they don't want to sell their gold, but they need to get liquid if they're a professional money manager or a trader, and they have to sell some of their gold stuff to pay off margin debt on other things. That's what happened in 2008, but gold actually rallied very strongly after it initially fell. Oh, okay, let me pull up there was a second tweet. So I talked about management of perception economics, and I just talked about how whether you're in the United States or the European Union or Japan, from what my listeners are telling me in these countries, your taxes are just being increased across the board on a lot of different things, or the politicians are looking to layer on new types of taxes. And most people don't think about it this way. But when you're paying your bills and figuring out how much savings or how much to budget and things like that, you have to account for inflation and taxes. And the average person just doesn't do this. A lot of businesses actually don't do this properly either. They hire, if they have an economist on staff, it's some person with the right paper resume. It's normally some Keynesian economist, maybe someone who worked on Wall Street. And they're not properly accounting for all the currency devaluation and taxes that are going to be layered on. Okay, I couldn't find the tweet. Hello Watchman says with MMT there will be much more money printing. Yes, if MMT is implemented, it will be. It will be, best case scenario is a lot worse stagflation and a lot worse taxes. That is the best case scenario with MMT. The worst case scenario is if the socialists like AOC and others who gain enough political power, they're going to throw people like me in jail. Anything I say is going to be hate speech. So there will be no free speech whatsoever in the US. So people can lose their jobs or not get hired or not even get a job interview for certain things now. But things, just because you think that's bad, things can get a lot worse. Watchman, why did you say hello, Jason goes to hell? What did you mean by that? Was that a typo? Normally you're pretty respectful. I'm going to give you the benefit of the doubt on that. So there's also arguments too about whether or not the European Central Bank can stop quantitative easing. And if they do stop, it might be temporary. But then this is my educated guess based on the information I have and the sources I have from over the years, that the Federal Reserve would have to step in with massive amounts of currency swaps. There already is currency swaps, according to what I've been told. But, it may be like just some stupid astronomical number in the many, many trillions. Because the European Union is ahead of the US on the curve for like rising populism, increasing amounts of socialism. There's been very high levels of socialism in the US, but in Europe, there's been even higher levels of socialism for a very, very long time. But it's getting to those levels now in the European Union where the next couple elections, that could be it. The US is about, I want to say, at least 2 or 3 election cycles behind the European Union in terms of populism and potential political revolution, but things are looking very, very bad in the European Union. And I think that's why, in spite of the Federal Reserve announcing no more rate hikes for the rest of 2019 and potentially 2 rate cuts, Larry Kudlow asking for rate cuts, quantitative tightening ending, I think, in September, and potentially QE starting up not too long after that. That's why the dollar is still, on a relative basis, stronger than the euro. It's still rallied because people are looking at the geopolitical situation in the European Union and they're saying, wow, as bad as things are in the US, the European Union is way worse. And they're keeping a lot of this stuff out of the American mainstream media. So there's going to be dumb American tourists that go to Paris, dumb American tourists that go to where the protests and stuff are, and they're probably not going to know. I hope they don't get into any trouble or problems, but I think it's a real disservice for the media to keep, the American media, to keep these things out of American news, but it's being done. My educated guess, based on how things work now and how much like threats and political phone calls and lobbying and all this other stuff, is the French government probably made phone calls to the heads of these American media companies and told them to keep it out of the news. That's probably what's happening. There's actually a new documentary out about Qatar. It's in the Wall Street for Main Street Facebook group. It's free. I think the documentary is called Blood Money. Let me look it up real quick. I think it's called Blood Money, though. And in this documentary, they talk about how no one is aware of this, or very, very few people are aware of this. And I live in D.C., and I haven't heard much about Qatar. I've heard a lot about the Chinese, a lot about Israel, a lot about Saudi Arabia. Those were, as far as I knew, the 3 main governments that are really getting way too heavily involved in lobbying and buying politicians and other things. But apparently Qatar is now, like, as they've spent tens of billions into this. And now they're very heavily involved in influencing and propaganda in the United States. Okay, so the documentary is called Blood Money, and it is, I think, 90 minutes long. Okay, I'm pulling it up now. Let's see here if the full one's here. Yeah, it's an hour 10. It's an hour 10, and it's Blood Money is the documentary, if you want to take a look at that. I'm reading the Bitcoin Standard now. It's a pretty good book. I like it. Think it's interesting. I don't agree with everything in the book, but I think overall it's really good. Oh, Jason Goes to Hell. Oh, okay. I watched one of those Jason movies. I don't really like horror movies. My subconscious plays tricks. And so, like, even though I might not think they're too scary watching them, like, once I'm asleep, my subconscious just starts having really weird nightmares. So I avoid the horror movies. I had a girlfriend, an ex-girlfriend. She was from Australia, and she was really addicted to those horror movies. It was weird. She would watch like Saw and then get turned on. It was so weird. Okay, we got one super chat. Let me take a look. Mandingo Warrior, thank you for the super chat. If Andrew Yang, universal basic income is a bad idea, what alternative do you see with the automation of millions of jobs? By the way, not a fan of universal basic income, but can't figure what will be a more effective alternative. Well, We need more competition. We need more real capitalism and more free markets. And this is not being allowed, Mendingo. Okay? What should be happening, and I've explained this at length, is when the real economy is at these levels, when debt is at these levels, when people do not have good full-time jobs and have to work 2 or 3 part-time jobs, or a full-time job and a part-time job, or 2 part-time jobs just to pay their bills to keep their head above water. What has to happen, and it is not happening, what has to happen, they will not allow this because the politicians and the bankers, they won't allow real deflation. They will not allow prices to fall because they can't tax it. But prices have to fall. Markets have to clear. Okay? If the real economy is not doing well, if you don't have your job, but prices are falling 30%, and you get a part-time job, and you have some cash and savings, you can get by until things improve, until things clear. They are not allowing a clearance. There needs to be a 30 to 50% in asset prices more, but a lot of consumer prices are way overpriced. There needs to be a 30 to 50% clearing drop in prices in a lot of things. And it is not being allowed because the politicians, and this goes back to Keynesian economics. Keynesian economics will not allow falling prices. Okay? This goes back to one of the worst things about Keynesian economics. Will not allow falling prices. Okay? The real economy, people in the European Union, people in the United States need lower prices on things to survive, the everyday things. And you know what? The prices only go up. And because of how perverse things are and how brainwashed things are, you have politicians forcing prices higher, wage and price controls and other things. You have them allowing their central banks to create currency units to force prices higher, and capitalism is being blamed for that. A central bank is not anything to do with capitalism. Central banks are fascism. Central banks are socialism. They are cartels. There is nothing capitalism or free market about them. Now, there are people making profits using cheap money and debt from central banks, but those are parasites, rent-seeking. Okay? Not capitalism, not free markets. So, if people are going to lose their jobs, then the prices have to fall a lot. But that's not being allowed. So basically then you have a situation where they're going to get people out of desperation to vote for socialism or accept a paycheck just from the government, some type of check just for food to survive. And even though people know it's wrong to survive, people do a lot of really bad, irrational, immoral things. Look at the bad things that happened in Weimar Republic, the hyperinflation in Zimbabwe and Venezuela. There's tons of these stories about how people had to do things, bad things. And let me give you an example of how bad one of the hyperinflations in China got. This was China's second use with fiat paper money. So the hyperinflation in China at that point was so bad that Chinese, even though they knew it was wrong, that parents to survive sold their children into slavery. Okay? You can go look this up. It's actually in the Bitcoin Standard in the new book I'm reading. He talks about it. So my point is that if things get bad enough, human beings will turn on each other. Human beings will sacrifice their morals. It's like the animal instinct's the worst part of humanity. Or humans resorting back to like basically being a feral animal. You know what? If you have 2 goldfish, right, in your fish tank or your fish bowl, and you don't feed your goldfish, what happens? And this is what the economic and political elites are doing, what the central bankers and the people in power are doing. They're setting things up so people turn on each other. But by the way, if you don't have goldfish and haven't seen it, if you don't feed your goldfish and you have 2 goldfish, there will only be 1 goldfish soon, because one of them will eat the other. And in a real capitalism and free markets, people would cooperate, maybe work together and build things, create new products and services. There would be beneficial deflation. None of these things would happen. There would be savings. None of these things are happening. Okay? Prices have to fall. Prices have to clear. There has to be deflation. Look, if prices don't fall, there's going to be people are going to vote for socialism. You're already seeing the rising popularity. Look how much Bernie Sanders just raised. In like 40 days, he raised $28 million, and it was from a lot of people only donating $100 or less, a bunch of micro donations. So if things get bad enough, people will sacrifice their morals, people will turn on each other, people will do all kinds of really bad, nasty things to survive. And during a hyperinflation or in a third world country, these things may be normal, but in a civilized society, it takes a destabilized society like a hyperinflation or shortages, like those types of things for that to happen. Exactly, Watchman. Bernie is an enormous hypocrite. And AOC is saying that there shouldn't be cows for cow farts, but she eats hamburgers all the time. She takes a luxury SUV limo to all her public speaking engagements in New York City. She doesn't even take a hybrid. She could rent a hybrid SUV or a hybrid limo. I'm sure there's plenty of those for the champagne socialists and Wall Street, the Wall Street Democrats, the limousine liberals. She doesn't even do that. She could walk. She could walk to the metro, the train station, from where she lives in the Navy Yard in Washington, D.C., in her luxury apartment or condo. She could walk to there or take like an Uber for a short ride and then take the train and walk there to work. And instead, she takes like I think it's a car service. I mean, the amount of hypocrisy from a lot of Democrat politicians and Wall Street people and Hollywood elites is insane. It just gets even worse. I never said Mexico's overseas. I guess that's someone else's comments. I've been to Mexico a couple times. There's some good places in Mexico. Okay, looking through comments. We're way over an hour. Just wanted to get a lot of these points out there. Oh, so I forgot. Here's one more story I want to talk about. So Kyle Bass has been talking about this for the last 12 months, and it's getting very close. China is now projected in 2019 to run a current account deficit. So for those of you guys who are not familiar with what that means, I have the Wikipedia, excuse me, not the Wikipedia, the Investopedia definition up. So the current account deficit is a measurement of a country's trade where the value of the goods and services it imports exceeds the value of the products it exports. The current account includes net income, such as interest and dividends, and transfers, such as foreign aid, although these components make up only a small percentage of the total current account. The current account represents a country's foreign transactions, and like the capital account, is a component of a country's balance of payments. So a current account deficit represents negative net sales abroad. Developed countries such as the United States often run deficits, while emerging market economies often run current account surpluses. Impoverished countries tend to run current account debt. So China is about to switch over for the first time since 1993, but way before it joined the World Trade Organization. I believe it joined the World Trade Organization in 1999. And China is about to switch over to a current account deficit, which normally, if you have the world reserve currency, you can get away with that, at least for a while, until you lose the world reserve currency. But China doesn't have the world reserve currency. Meanwhile, China has its credit bubble going like crazy. And there's just some crazy charts and graphs about debt in China. One of the new charts I saw was that China already has 300% debt to GDP ratio when you add in debt from the financial sector, government, households, and non-financial corporations. Let me see. There was one more chart on China I wanted to talk about. Here we go. So China has had the fourth largest credit bubble of any country over a 10-year period, and its private sector debt as percentage of its GDP is now above that of the United States. So this is according to the Bank of International Settlements, that credit to private non-financial sector percentage of GDP, China has over 210%. Wow. And China's credit bubble is, let's see here, it's put at only Spain, Thailand, and Ireland. Okay, so the 10-year change in private sector debt to GDP in China has been comparable to previous changes in Thailand and Spain prior to their crises. The Spanish crisis was from 2000 to 2010, when Spain had the housing bubble burst, and Thailand was the Asian tiger crisis. So China is comparable to those prior to their crises. Grass-fed meat says, you love my rants. I apologize for them, though. Well, I apologize because some people don't like them, and they say that my videos are too long. I can't make everyone happy. That's the problem. I try to make too many people happy. I should just do whatever the hell I want on here. And then, you know, hopefully it's good enough for some people. The yuan could be a regional currency. They've been trying to do that. China's been trying to give out a bunch of currency swaps and loans to a bunch of people, smaller countries, Southern Asian and African and Venezuela, and other South American countries. Hello, Wendell. I disagree. China's economy is based on theft. As immoral and bad things happening in the U.S., China is just as immoral, if not worse. And just because China has gold, China also has the fastest growing credit bubble in world history. So we disagree on China. And that's based on my Austrian School of Economics with central planning. Central planning doesn't work. That scale, that level of central planning, it makes the Soviet Union look tiny and irrelevant, what China's done. And yes, the U.S. has central planning, but it's not doing the crazy things that China is. They're not, the U.S. isn't building buildings that fall apart as soon as they're built and then no one goes to prison. If you did that in the U.S. and regular people on Main Street died, there would be people going to prison. There would be civil lawsuits. None of that's happening in China. Okay, guys, well, that's it for today. I think I've covered almost everything I wanted to cover. Everyone have a nice rest of your week. And if you're in the United States, taxes are coming up soon. Hopefully you get those done. And I'll see you guys when I see you. I'm not sure if I'm going to do any more interviews this week. I do have some things I maybe could get lined up. I'll let you guys know. I got to get my taxes finished first, though. So if anyone knows a good CPA, give me a referral. Okay, bye.